Today, we are talking about why I am selling the largest position in my portfolio and where the money is going to be reallocated. Hey everybody, and welcome back to Dollars and Cents, helping you make sense of making dollars. And remember, if you enjoy this video, be sure to like and subscribe. With that, let's get right into it. Originally, I had a different video planned for today. After doing the research for my video on ETFs, I decided to dig a little deeper into one of them, but I'll talk about that one a little later in the video. For now, let's go over what I'm selling and why. Minnesota Mining and Manufacturing is a company that has been around since 1902, more commonly known as 3M. They make everything from Post-it notes to the N95 mask and have been making staple products used by every household both in the US and abroad, even if you don't realize it. 3M is a multinational, multi-billion dollar company that has brought in more than $32 billion in 2020 alone. First listed on the New York Stock Exchange in 1946, they have been around for decades. Initially, I bought this titan of the industry for their dividends, which they have paid for more than 100 years after listing themselves on independent markets, and then they have been increasing that dividend for 62 years. Recently, 3M also reported their earnings for Q4 of 2020 and beat estimates to finish the year strong. Despite this, I still plan to sell my stake in 3M. I'll explain my reasons for selling here. My first reason for selling my position in 3M is I've strayed away from the rules that I've set for myself. Back in episode 1 of this series, I said I wanted to get to an 80-20 dividend growth to high growth portfolio. As it stands right now, my portfolio is 97% dividend growth and 3% regular high growth. Yeah, just a little bit off there. Selling 3M stock, in my opinion, is a move to rebalance my portfolio. Secondly, to me, 3M feels very stuck. While they did post a solid Q4 in 2020, this hasn't absolved them of the fact that they ended down 0.5% from where they started earlier in the year. Granted, in March 2020, they experienced a 15% drop, like most companies at the start of the pandemic. Despite the massive demand for masks and PPE, I believe 3M should have seen a stronger bounce back though. We didn't see that happen. Of course, I still have high hopes for this company going forward, but for the time being, I will sell my stake. The last reason why I'm selling 3M is, for me, the biggest reason. I think the capital I have could be used better elsewhere in other investments. Not that I think that 3M is a bad business or that it's going in a bad direction. In fact, I will most likely buy back into 3M in the future when the stock price comes back down. I think that for now, there are other opportunities that I want to explore. While I love 3M's business and products, and certainly love their dividend, I just don't feel that it makes sense for me to continue holding this company currently. Now, where am I investing that capital? Well, let me introduce you to an ETF called ESPO. This ETF is offered by the company Van Eck, an investment management company established in 1955 that operates a strong ETF business and offers other solid investing options. What is ESPO? It's an ETF that focuses on gaming companies and esports. Their largest holding is Tencent, a multinational Chinese holding company that owns large stakes in Supercell and owns the entirety of Riot Games, the video game company behind League of Legends. While Tencent is the largest stake at 8.5% in the ETF, ESPO also holds other stakes in some of the large game companies like Nintendo, Electronic Arts, or EA Games, as well as Activision Blizzard and Square Enix. And despite its main focus on gaming, ESPO also holds stakes in companies such as the PC chip makers Nvidia and AMD, and has stakes in both Unity Software and MicroStar International, or more commonly known as MSI. For me, this is what sets it apart from the other ETFs in its category, that it's an ETF focusing on the gaming industry, but also has holdings in PC part makers and software development companies. All of this makes ESPO a kind of all-encompassing investment choice. I play a lot of video games myself, and I can certainly see efforts to better monetize gaming, like microtransactions, in-game purchases, and downloadable content that can be bought later after a game's launch. Not everyone will agree with these tactics, however, I think the gaming industry will go a long way in the future, and I'm excited to see it really take off. Again, I am no expert, and I could be completely wrong about 3M and video games. I just want to give you insight into my financial journey in hopes that you might learn something, or at the very least, learn from my mistakes. And with that being said, I hope to see all of you in the next episode of Dollars and Cents.